We did have a question here from Rocket from Guardian in the chat. Is NVIDIA oversold? So just want to know if we can take a quick look here. I brought it up on my chart. I see that you have it there. So also, I don't see it here on your chart, but by the way, the current price right now really seems to be just kind of straddling that 200-day moving average, if that's important at all.
Yeah, this was actually the stock of the day on, I don't know. I think it was maybe Tuesday. But this is very important. And a lot of times markets are difficult to read, right? And sometimes they're kind of easy to read. And when I say they're easy to read, it means there's just maybe one or two things you got to focus on. And I think this is kind of one of those times. Now, the answer to your question is, from this time horizon, no, I don't think NVIDIA is oversold, because we had this big move, right? And maybe at this point it was oversold by some definitions, but we've basically gone sideways now for 5 days. So being oversold is like a rubber band, or being overbought, right? It's like it's really stretched out. But if we spend some time trading sideways, that kind of takes the overboughtness out of it, or the soldness out of it. So to me, this is not an oversold stock, because it's basically been in the same range here for 5 days. And it looks like this morning, it looks like this morning it's not really moving either. I don't think
it's down about 1.5%. It's looking at about 122.81 here.
Yeah, which is like right in here. Now, here's an example of what we saw before with buyer's remorse with Ford, right? It's not a coincidence that we had this sell off and we had a rebound. This is where we stalled out, right around 130. That's just not a coincidence. It's not like a random act of the market gods. There was resistance here because there was support over here, right? Now, if I had traded this, my target would have been, from a trading target, I mean, I don't know where it's going to be in a year. My trading target would have been 130, or around 130. People buy, and then the price goes below their price, and they're like, oh, I made a mistake. If I can get out of this at break even, I'm going to. So this is a perfect example. And if you think about how big NVIDIA is, and what the market cap is, and how many shares it trades, and people all over the world are trading it, whether you have individual retail investors, you have big institutions, you have algorithms, you have value, every different kind of strategy you can think about. Yet somehow it finds this almost like perfect. Actually, let's kind of get really nitpicky here. Opening price over here, 129.09. Closing price here, 128.99, and the high one. So we're talking about
10 cents.
Pennies.
10 pennies
on a stock that's $130 a share. And, I've been doing this a long time, and this stuff still amazes me. There's, in the fundamental world, like your traditional fundamental analysts, earnings, EBITDAs, margins, like this shouldn't happen. There should be no explanation for this. But as traders, and we know that the markets are driven by psychology, this doesn't surprise us at all. A lot of people say to me, Mark, well, how is it that all these like AI programs and these quantitative programs do this? Well, remember, they're based on historical patterns. They go back and take the data going back however long. So they're just looking for the same patterns that occurred before. And as long as there is buyer's remorse, we'll see support levels turning into resistance. I mean, I look at charts sometimes from the 1800s, and if they weren't labeled, you wouldn't even know that when it was from this. I mean, this could be like United Sugar Corp in 1890,